Hello traders, Gary Wagner here for Trending Markets, approximately 11 o'clock in Honolulu, 4 o'clock in New York. Dow Jones Industrial Average on a rampage and a pre-FOMC meeting announcement rally, so to speak. Currently up about 156 points, 17,525. Now the low, 627, about 100 points above this, so we're well off of the highs, and we are trading, call it mid-range on the day, but a substantial rally nonetheless. When we look at the S&Ps, whether it's through the eyes of the E-mini or the regular S&Ps, those are also well off of the highs, but definitely showing some very, very nice gains, up about 1.1%, 22 points higher at 2044.20. The low 2025, so you can see we're well off the lows, 2053 on the high side, so we are just off of the highs of the day. You can see on some of the intraday work, and we'll pull this up just so you can get an idea of what we're talking about. But as the market came up, it found some resistance right up in here, just above, call it, I believe it was about 2055 in that area. This is a very short-term chart, just being a 30-minute chart right here. So, and that's just the S&P. When we look at the E-mini, that is also trading up at 2034, up 1.23%. And here's what I'm finding interesting about daily patterns that we now see forming in the market. Now, when we look at just the standard candlesticks that we get off of our daily chart of the big contract meaning the regular S&P, you get almost this hammer-like candle. This came in yesterday, and you get a variation really off of a three-river morning star. The reason it is a variation, of course, is you do not have a star gapped below, and you've got a body size almost too big for a star, but you do get these three basic candle types: the red, the small-bodied star, and then the green candle. Of course, confirmation would be tomorrow. If you get a green candle with a higher high and a higher low, you actually take that call. However, when we look at the mini S&P, and let's go ahead and pull up a daily chart and you'll see what I'm talking about. We can just look at it in this way, but we get much more of a three-river morning star in terms of a straight candlestick pattern. You can see that right here, these 3 days. Now, what does that mean? Well, here's my sense. My sense right now is that we have, in fact, shown some sort of a rally. We've also shown some solid support right in this area, meaning 2,000 on the S&P. And my sense is that we are going to see this market rally again tomorrow. My concern is not so much where we get into the market, and this would be our confirming candle. It would be green, not yellow. But it's not whether we get in the market at 34 or 44 or even 60 or 65. It's where we're going to see this market go to, because if it's going to travel back to 2100, I don't mind if we get in at 2050 or 2045. I simply do not want to expose ourselves to the tremendous potential for volatility that we could see tomorrow as the announcement comes out. Now, I think that a rate hike is pretty much baked into all of these markets. It's been anticipated, and all of the markets have been reacting in such a way that they are anticipating that rate hike. So it's really going to be the language of the Fed when they have the press conference and how they address ratcheting up rates over what period of time and what degree they'll ratchet it up. That is going to be the key. And obviously, it is my belief that the Fed is going to do whatever it can to make sure that the markets are as stable as possible. Now, we are looking at a daily chart. Now, on this daily chart, we've got the two moving averages that we put so much emphasis on. First of all, this dotted line right here, this is our 50-day moving average, is solid. Blue line, of course, is our 200-day, and we are obviously well below both of them, but you can see that the shorter term, the 50-day, looks like it's about to cross over the 200-day. That's a real positive and bullish sign. And of course, if and when the market moves into this territory, and to do that, it's going to have to come over about 2056. That's extremely bullish too. We can see that there's real support at 2003. We talked about that. And so my sense is that the Announcement will come out, I believe, or the press conference is about 1 o'clock Eastern Standard Time. Markets are still going to be trading. Depending on what we see tomorrow, we're probably going to look to enter a long position in the Standard & Poor's E-mini tomorrow morning or tomorrow afternoon after the Fed announcement. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow after the FOMC meeting. We will send out a special trade alert if we recommend going long the Standard & Poor's. Bye-bye.